Looks like this is the 30th week of the Financial Roundtable. Remember, Michelle, we said we were going to do this for 5 weeks. So happy 2021 to all of you. Use the chat. Let's keep this interactive today. We've got several really amazing segments today, including a share by John Pitzel, CPA. Remember, these roundtables are produced by Qnity, and we also have some great sponsors, which are Aura and Vish. Definitely check out when we had them as guests on the roundtable. It was great content. And both of them in the case of increasing revenue and decreasing expenses. So, so in a moment, we'll bring John into the conversation. John Pitzel is a Minnesota-based CPA with the firm Pitzl and Pitzel. He officially now enters our brain trust of amazing contributors. Look at this wall of fame here, and it just keeps growing and growing. John, you're in the bottom right-hand corner. Michelle, we're going to have to start adding space to this. And by the way, a little tease for you Brain Trust members, be watching your mail in the next 10 days here, as we have a special gift going out to members of our Brain Trust. So those of you that would like to listen to prior recordings, it's amazing information that goes all the way back to May. They're stored in our Plan for Profits portal. Let me drive home a time-sensitive event coming up. We've been talking about this for probably the last maybe 2 months, but it's coming up. Serious Business year number, I don't know what year it is, but every year has been amazing, and we're always part of Serious Business. It's coming up January 17th and 18th. You can go to seriousbusiness.net to register. And Qnity, once again, is a sponsor of Serious Business. And then also a reminder, and I want to hit all of you over the head with this one, okay? Please mark your calendar. Tuesday, January 19th, 10:30 to 12. We are going to have a 2 to 10 special session on multi-location success. In order to be part of this, you do need to be registered for Serious Business. If you are registered for 2 to 10, you will receive a complimentary ticket for Serious Business and this session. Watch for an email. So mark that date. And many of you 2 to 10 regulars out there, you'll be hearing some direct communication from me to you in the next 48 hours as I draft you to make this even a better event on that day. So this is all about multi-location success. A little bit later, after John, we let John go for so he can work on his very busy time of year for John. Tax planning starts January 1st for John. So after we excuse John, I'm going to give you just some insights that we have from a lot of work that we're doing with helping businesses, whether they're in a grow mode or go mode or undecided. So I've got about 9 key tips and updates for you that we'll do probably around 30 minutes after the hour, as well as some really important things to be thinking about this time of year for leadership teams. So you should have gotten a 9 grid, help you keep notes. And without any further ado, John, I'm going to take this off the screen here. So it's you and I. John, good morning. How are you today?
I'm doing well, Tom. Thank you. How are you doing?
I'm doing great. It's nice to get you. I tried drafting you a couple times in December, and man, you were busy in tax planning, taking care of your clients. You're so gracious always with information, and I'm certainly enjoying the work that we do together and want to appreciate you for joining us today. So thank you.
Thank you for the opportunity, Tom.
So you are actually the first CPA that we've had in the roundtable. And I've been a little bit hesitant because I really wanted to invite someone that I think could really communicate with a high degree of expertise and competence, but also in language that we understand, you know, making it digestible. And that's one of the things I appreciate about you is your background, your contribution, and you're able to make things very digestible. So obviously there's a lot going on, and I know you could write books and give full presentations and everything, but I have a few topics that I think would be great to cover with you. And starting with the, let's see here, why don't we actually start with the, what's going on with the ERC, employee retention credit. Now, obviously there's some changes there. Some of them would apply to our audience, some of them wouldn't. So We're talking about some serious money here. So you want to maybe just give us a bit of an update on that?
Yeah, great question, Tom. The employee retention credit is a special credit that employers are eligible to take for wages paid to employees if you meet certain criteria. And the main criteria is, have your revenues this year decreased 20% or more over the prior year? And when I say this year, in 2020, for any quarter, for example, June over June, the second quarter over the second quarter, third quarter over third quarter, if revenues have decreased more than 20%, you're eligible for a tax credit of up to 70% of qualified wages that you pay to your employees.
God, this could be a massive number, John.
It really can be. And, in 2020, the credit was available in addition to some of the other coronavirus-related stimulus for $10,000 per employee per year. It's been expanded to $10,000 per employee per quarter. So if you're operating your business and your revenues were down last year, even if you're coming back this year in 2021 and it comes back, you're still eligible to take this credit on wages paid through June of 2021.
Mm-hmm. And this was very recent legislation, right? I mean, this was in the last few weeks then, right?
Yeah, you used to have a 50% reduction in income, which is pretty tough to hit, although under the current circumstances, some of our clients did hit that last year. But the 20% threshold is certainly more attainable for a lot more businesses that are restricted from operating due to coronavirus-related mandates or legislation. So we're trying to get as many people aware of this credit and start to ask us or your tax advisor or even your payroll company, if you're using a payroll provider. They've got some great information on it too, and try to get taxpayers and business clients to use this credit to help with cash flow and through these difficult times.
Yeah, there wasn't a lot of talk about this credit. Everything was pretty much so much of it was about the EIDL loans and PPP, but this is sort of a sleeper out there. Would you agree with that?
A big time sleeper in that, 50% reduction is tough, although it happened. But a 20% reduction certainly seems to fit the criteria, and Congress, as part of the CCA Act that they passed in December of 2020, changing the threshold from 50% to a 20% reduction qualifies a lot more taxpayers for this credit.
Yeah, so many, John, we've done a lot of research with our clients in the market, and what we're really hearing is that an average of 25% down. We're seeing businesses that are flat, very rare, very, very rare, but usually 20, 25, 30% is about the average that we're seeing for most businesses. So that really opens up a big door for many of you guys out there. So John, we've got some questions. We're gonna hold those questions for a little bit, and let's go a little bit further. Anything else you want to add on that, or why don't we go into, also there's something regarding group health plans I want to cover that relates with this also as qualified wages. Do you want to talk about that for a moment?
Well, there's a couple things that are a couple new things related to group health plans. First of all, there's a credit. I don't have the amount on my fingertips, but I think it can be as high as up to $500 per employee for starting a qualified small group health plan. That's been around for a while, but it's been extended. And then, when we start to talk about PPP money, any health insurance premiums that you pay for your employees are eligible as part of the forgiveness provisions of the PPP loans.
Okay, all right. Let's get into, and the official name is the Bipartisan COVID-19 Emergency Relief Act of 2020. All right, and I'm seeing the questions pop up here. Michelle, if you want to digest those, and then we'll deliver them to John all at the same time in a little bit, okay? So we do notice we got a lot of questions coming in here, and we'll come to those in a little bit. So let's talk a little bit more about PPP and small business support and what's new. And a lot of people that are on this roundtable, they stay on top of this, but many don't. And even if you're on top of it, it can be confusing. So let's go there a little bit. Let's go through what that new act covers here.
Well, the biggest thing we got out of the CAA Act was all the forgiveness of the PPP loans will be tax-free, and you're allowed to deduct the expenses. So essentially, if you received a PPP loan and it's forgiven, that's going to be treated as tax-free money to you, which is huge, Tom. I told my wife, she's my partner in the firm, she sits right over across the hall from me. When this passed in March, I said, this is the biggest thing we're going to see in our lifetime probably as far as government tax-free aid to small business, and Congress has shored it up and made sure that it is shaping up to be that way.
Yeah. So it's the exclusion in income, and it's also the deductibility of the expenses, right?
Well, the IRS threw us a curveball. So in March, Congress said, we're going to give you these loans and we're going to forgive them and they're going to be tax-free. And the IRS came out 2 weeks later and said, well, that's great, but we're not going to let you deduct the expenses you incur for the forgiveness of those loans. Essentially, once it comes full circle, that makes those PPP loans taxable. But Congress straightened that out with the CAA Act, and it's all tax-free money now.
God, I'm just thinking of you guys out there as business owners and leaders of teams. And I'm saying, this saved a lot of businesses. And frankly, I was really worried going into the second half of the year, kind of watching the tax time bombs. And I had a lot of conversation with clients and saying, geez, you've got to be funding some potential unexpected tax hits here until this was clarified. So saved a lot of small businesses, right, John?
Big time. And, now under the new bill, we've got a second round of PPP money coming. A couple simple requirements for that one. You had to have taken out a PPP loan the first time to be eligible for the second one. You have to be able to demonstrate a 25% reduction in income, gross receipts, in any quarter, year over year, first quarter 2020 versus 2019. And some more expenses are eligible for the forgiveness this year. For example, sanitation-related expenses, modifications you've made to your business, if you had to put up plastic shields at the front of the salon, or if you're buying masks, anything you're providing related to that is also eligible for forgiveness, in addition to wages, rent, health insurance, and utilities.
And they also distinguish between smaller loan amounts and relaxed some of the reporting requirements. Is that true?
One of my favorite parts of this one, anyone who's filled out the PPP loan, it's very detailed and long, cumbersomely slow, and unnecessarily so much. They made loans that are under $150,000. Essentially, you have to fill out the application. It's an easy application, and then retain the documentation for yourself that you used to submit it. So really, it cuts the whole process down probably by 90% and makes it a lot easier to qualify for and get the forgiveness completed with your bank.
Yeah. And this new round of PPP, it's for smaller businesses, right? It's under 300 employees. Is that correct?
Under 300 employees is correct. Yep.
Yeah. So, all right, a lot of this is like public information and we can read about it, but what are your sort of insights in this as being in the front line every single day? Is there anything that you want to highlight with this, or some hidden gems? I mean, take us behind the curtain a little bit. And I do want to mention to everybody at this point, I know we have some questions, and John will be happy to entertain the questions. I do want to offer a disclaimer on behalf of John as well as us that get your own professional advice. John is not your personal advisor. This is for education purposes. So John, I'm giving that little disclaimer for you, which I think is fair. I mean, we stress the importance of hiring competent professionals like John. So certainly John's here to educate. So anyway, I had to mention that. But so John, take us behind the curtain a little bit here. What else do you see as opportunities as it relate to I'm going to make this a broader question, tax-related opportunities that may or may not relate with some of this new government relief that has come.
Yeah, I mean, the biggest thing to finish up the PPP discussion is you never know how many people are going to apply, and it is a limited number of dollars. So the banks are the ones that drive this whole equation. As soon as they open up to start taking applications, if you're interested and you think you qualify, I'd get a hold of your banker, get online, submit an application, and get in line with your bank to get some more of this PPP money. Go ahead, Tom.
No, go ahead, please.
I was going to say one of the final things to kind of bring the PPP full circle, some of the things you can do, improvements you could make to your salon that provide for social distancing or you to be able to operate under the new kind of COVID era are eligible for forgiveness. So if we're filling out an application for a PPP loan and we get a higher amount, but for some reason we don't think we're going to spend that money on wages or some of those other utilities and rent, and we're worried about being forgiven, you could consider an improvement to the salon or upgrade that would be kind of COVID-related improvement, and that would be eligible for forgiveness, tax-free dollars you could use for some of those things.
Wow. Okay, great. Thank you. All right, so I have some questions here. Laura asked a question, is this for companies, even if we got a PPP loan? I believe you've already answered that question, John. Laura, I think he's answered it. If you want any clarification, happy to provide. Or John, do you have any clarification, or should we just move on?
Well, one question we get from our clients, we got a PPP loan the first time, but it's not forgiven yet. Can we apply for the second one? The answer is yes. And one of the criteria for getting a second PPP loan is you have to have gotten one the first time. So I hope that helps answer that question, Laura.
All right, I'm being handed a question here. How does the ERCT work for those who receive PPP funds?
Great question. So you're not able to use, you can't double dip. You can either use PPP, qualified PPP funds to pay wages, or you can use the employee retention credit. So, you know, it's going to be at your discretion and the employer's discretion to how you allocate your PPP money. For example, if you received a $50,000 PPP loan and you use the 8-week versus 24-week covered period, you're going to get through that a lot faster, and then you could use the employee retention credit on other wages, or vice versa. You use employee retention credit wages for January. Finally, your PPP loan is funded in February. You go through that in March and April using the 8-week period, or even 10 weeks of the 24-week. I don't want to get too technical, but you can't double dip on the same wages, but you certainly can have the credit and the PPP loan in the same year using different wages.
Okay, gotcha. Kip, good morning. Good to see you joining us today. What should I pass on to my accountant to pursue this tax credit? God, I got to think that any tax accountant, John, would be aware of this, but what would need to be passed on?
There's a lot of information out there about it, but the best thing about the employee retention credit is it's used as a reduction in payroll taxes due with your 941. So, for example, to really simplify it, if you are paying yourself and your employees and the payroll company pulls $15,000 for wages and $3,000 for payroll taxes, that $3,000 payroll tax auto debit will be reduced by the amount of the employee retention credit. So literally, as you're running the payroll, you get credit for the credit, and you won't have to make that deposit for the FICA taxes.
God, it's just unbelievable. It's unbelievable, actually.
Those are good ones, and it's real money, and you get it right now. So we really like that one.
Yeah. Roman asked, what about if we received a Form 7200 credit?
So I believe the 7200 is the form that the payroll companies use, I think, to do the behind the scenes 941 credit. So that simply is the form that they use to reduce the 941 deposits.
Gotcha. All right. Let's see what other questions we have here. Michelle, are you seeing any other questions coming up? I think you answered them all, John. John, I know we have a hard stop with you at 10:30, and I did want to mention to the group that John and I, we're doing some great collaboration these days. And, you know, John, one of the things I like about John is not only does he provide great tax advice, but he's also very seasoned in transition planning. So John and I have the opportunity. I mean, when you get to transition planning, whether you're going to grow or go mode, and I'm going to get to that in a few minutes here, it's really important. The tax impact of transition planning is enormous. And so recently, I've had some of you start working with John. And so John, thank you for taking the time today and for your expertise. Maybe we'll have you back as a guest if something significant comes up. Does that sound good to you?
Happy to help. Small business is our business.
Yeah. Tell us a little bit about your firm. You said your wife's in there. Tell us, just a little bit more about your firm.
We have 15 employees in Arden Hills, Minnesota. My wife and I started the firm in 2008, and we've grown from there. I have a brother in the business too, and I am one of our clients. I'm a small business. I started with nothing, and now I have employees and retirement plans and all kinds of things that come with managing a small business. So I've been where you are, and we'll go through it with you. We want to be a part of that group that surrounds you and makes you successful, however you define success.
All right. If you want to get a hold of John, put something in the chat to Michelle, and she'll put you in touch. John, we do need to award you a token of appreciation as a member of our Brain Trust. This is a $1 million bill inside a light bulb. So this is your official designation as a member of the Brain Trust. Guys, if we could give John a loud, actually a very silent virtual applause, that would be awesome. And John, we'll let you get on with your day, okay?
Thank you, Tom. Thank you, everybody. Have a great day.
All right. Thanks again, John.
Yeah, you too.
Okay, guys. So let's see here. I want to do just a quick, let me see. Michelle, is there anything? Looks like I missed your questions, Trent. I apologize for that. But let's just see who's on the call. I mean, I think this is a great time to acknowledge who's on the call. And then I've got like 9 things for you guys that relate with things to do now, as well as some trends that we're seeing out there. So stay tuned, but let's just see who's on the call today. Certainly some of my personal favorite people. Amanda Hare. Hello, Amanda. We have Anna. Good morning, April and Ashley and Austin. Brock and Casey and Christine. Christine Griffith, nice to see you. And Diane and Jackie. I assume Linda and Melissa are with you today from Reflect, my Minnesota colleagues here. So glad to have you joining us. James Griffith, Jan Hill, Joe DeAnda. Looks like Karen is with us too. Good morning to the great state of Colorado. Hello, Julia from down at Bob Steele in Atlanta. We've got Justin. Hello, Justin from Pennsylvania. Carla, good morning. You're up early from California. Kate from Ilof, who's been a member of our Brain Trust. Awesome. Hi, Kelly. Con, Happy New Year to you. Kip, great to see you on here. We'll be talking soon. Hello, Laura, Linda, and Lisa Justice. Linnell, you're with us this morning. Awesome. Thanks for joining us. We've got Jorga. I think I pronounced that right. If I didn't, my apologies. Jurga. I'm terrible with pronunciation. Sorry about that. But good morning, Linnell. Marilyn, how are you, Marilyn? And my good friend, Mark Pardo. Hello, Mark. I hope you are feeling fantastic. It's great to see you with us this morning, and hope to talk to you soon. Hi, Melissa. Thank you for joining us. Melissa H. and Melissa K. Michael Anderson, Michelle, Philip, Rebecca, Roman. Roman, thank you for your question. Hi, Sam Ricardo and Sam Johnston, Samantha. Oh, Scott Randolph's with us today. Trent, Vanessa, and Wendy. All right, so we have a all-star group of participants today. So let me go over to what I've got on the screen here. And I just want to share with you guys some things here. Okay. All right. I actually don't need this. I just need a few notes. All right. So these are some comments that I have for you based upon work that we're doing right now and just some recommendations this time of year. And this is really for all of you. Okay. All right. So great time of year to connect with your team, and great time of year to get closure on 2020 and begin to gain clarity for 2021. At Qnity, we call it the 3 C's: closure, clarity, and confidence. It's a really good format to engage in conversations with members of your team, starting with your leadership team. What we did at Qnity is last week we had one-on-ones with all of our coaches, and to have that one-on-one special time with them at the end of the year, reflecting on 2020, planning on 2021. It was just such amazing time that we had. Last night, we actually had our version of a holiday party, and I have to tell you, it was a blast. We had a chance to have everybody in our team go around, and first of all, we acknowledged everybody as a team, and then we had everybody share certain things about last year. And it's just really important that you become intentional with members of your team to connect and help them get closure on the past and create greater clarity for the new year. So you definitely want to do that. Next thing is performance-based bonus plans. Now, we touch on that in the Plan for Profit curriculum, and it's a great time to be thinking about that. As you're looking for greater financial success, there's definitely a correlation between members of the leadership team being involved in profitability and actual profitability. Performance-based bonus plans are a very delicate thing. It's better to not do it at all, as opposed to having loose ends. So if you're going to do a performance-based bonus plan for members of your leadership team, a few keys. We go through this in the Plan for Profit curriculum, but just off the top of my head, a few keys to success. First of all, if you're doing a performance-based bonus plan for members of your leadership team, number one, it has to be self-funding. It has to be over and above expected cash flow and projections that you have for your business. Number two, it needs to match a combination of being significant, but also achievable. It's not a good thing to create a bonus plan that just you have no chance of succeeding. People give up and they become cynical about it, and it could do more harm than good. So you want to make sure you have a balance between it being significant and also achievable. Also, time frames for performance-based bonus plans. Personally, I like to have 2 different types of bonus plans. One of them relates with revenue, sales, which many members of the leadership team can be involved in. That it can be very simple, usually monthly, or is a great time frame for that. Profit-based bonus plans, I love to see them based upon quarterly and annual goals. And I like to see them being based on something we call contribution margin, which is taking your P&L and reducing it down to controllable items on the P&L, so members of your leadership team are not distracted by things that they cannot impact. So really great time. You can go into the Plan for Profit curriculum, have some tips on a performance-based bonus plan. We can also help you design that if you want. Sometimes it is good to have a third party help you on this. So, but this is certainly something you could take a look at in the first season of the year. We define a season as being 6 weeks, January 1st through February 15th. And you can design your plan in the upcoming weeks. You can either go retroactively to the first of the year or start at the beginning of February, March, or whatever. The next thing to mention is just certain principles from the Plan for Profit curriculum. Budgeting and forecasting. One of the terms that we use at Qnity is called push the pulse. And as we've really gone through this whole year, we've seen many of you really take advantage of certain recommendations that we've had, and that is to shorten the cycle of what you do. So listen, annual is a great time frame to look at, but it really needs to be reduced into more bite-sized chunks. And so make sure that your budgeting and forecasting is dynamic and not static. especially in a highly volatile environment. Other things that come from the plan for profit curriculum to recommend, great time of year for new financial systems. One is the importance of named every number. And that is making sure that for every line item on your P&L, there's an individual that has primary accountability for that number and someone that has secondary accountability. So great time of year to look at named every number. And I'm going to leave it at that as it relates to certain financial related things from Plan for Profits. I could go on and on and on, but I won't. Some observations that we are seeing being in the front line with our clients and working very closely with many of you. And one is that a decrease in sales does not necessarily mean a decrease in profits. And I don't mean just because of PPP and the exclusion of PPP from income and the ability to deduct the expenses. I mean, there are many businesses that, and many of you on the call, we've interviewed many of you, you've been part of our brain trust. You've used the pandemic as a silver lining to proactively address your revenue and cost structure. And it definitely is a silver lining. We heard that at the very beginning from the ILOF group, and so many of you, I think Trent Lang has talked about that a lot too, is to don't assume decline in sales means decline in profits, okay? We were with someone last week and they've been just decimated. Lost, how many was it? Weren't they down like 45%? And, but their profitability is equivalent or higher than the prior year, which is pretty amazing. It is possible. So those are a few things as it relates to like in general things for this time of year and comments. Let me move over to grow or go. All right. And with grow or go, we're very active in conversations with many of our clients that are making the intentional decision what they want to do with their business in the future. Are they committed to growth? Are they in an expansion mode? Are they in a mode that they really want to, I mean, they're all in. All right. And it's not that they're not thinking about a transition plan, but they know that they're going to be in this in a while. And in many cases, they're in a mode where they are expanding. Trent Lang's a great example, opened up another location. There's several of you on this call right now that I know are involved in potentially buying another location in your marketplace. So some comments about grow or go. One is that in many cases, one of the things we're looking at is people might approach us because they think what they want to do is they want to transition out of their business. And what they really want to do is they want help. And they also want to have the confidence that key members of their team are going to stick around. Employee retention is a really big issue today. There's a lot of migration going on into whether it's into suites, rentals, et cetera. And one of the things that we're working on a lot is helping businesses bring on employees as partners, whether actual partners or de facto partners. And a lot of times there's a mindset, and I have this mindset too, is that bringing in partners that are key employees to become owners or a multiple year plan for them to become an owner, there is an assumption that the employee may not have money. All right, they may not have money to buy in, and that's a very fair assumption, but it's not always the case. We're finding within many salon teams there are qualified buyers, and I can think of several right now that are able to get the funds to be able to buy in as partners, which may actually lead to a full transition for the owner out of the business. So don't assume there's a lack of qualified buyers on your team, because many of them have family resources and have other resources that you might not know about. Next comment, after I take a sip of water here, is time frame. You know, I think that, I know when I created Qnity, one of the things I had at the very, very beginning, which, oh my gosh, how long has Qnity been around? Over 10 years. The last thing on my mind when I started Qnity was to sell. All right. And it's not on my mind at all right now. But as part of the design of Qnity, it was always build to scale, build to sell. I think it's important that all of us look very intentionally as owners and make sure, I don't care if it's 10 years out, 20 years out, whatever. I think that's a very important thing to be keeping in mind, is that we want to build your business to grow, but we also want to build your business so you can go at whatever time frame is right for you. Time frame is a moving target, and Michelle and I have seen that loud and clear. Just even within the last 2 weeks, some people will come to us and say, "Oh, you know, I want to transition my business, and I want to transition my business, and I want to be out in 7 years." And then they fill out the questionnaire and say, "When do you really want to be out?" And they're like, "I'm done." All right, so we have this gap: 7 years, done. It's a big gap. Like now, 7 years. And so that it's a moving target. It's a dynamic thing in terms of if you're thinking about your transition plan. Now, granted, I'm talking about transition plans during a call that's really a financial roundtable, but many of these principles apply whether transition's not even on your mind or not. Legal structure. You know, we're working with several businesses right now where their legal structure is not set up to do the kind of things that they want to do. For example, one thing that I've noticed is businesses that own real estate and then also own a business. They should be separate entities. They're different business models. There's different tax related impacts. So we're working with some businesses to really separate that. I know that it dragged on an acquisition by a full year because a salon had the real estate and they had the business under the same company, and it just was not transition friendly. Legal structure, I think, is a really important thing to be looking at in your business to accomplish what you want to do in the future, including potentially bringing in partners. So, all right, those are just a few thoughts that I have for you. Michelle, is there anything that you feel we want to add to this? She's given a shake of the head there. So I'm going to pull up on the screen here. Sometimes I get a text message from one of you during the call. That was not what I got. So, all right. All right. So let's do this, guys. I'm going to, let's see what we got here for you. All right. I want to give you a reminder. I know I went through this once. I'm going to go through it again. Serious Business is coming up September 17th and 18th. If you haven't purchased your ticket, you should go to Serious Business. It's one of our favorite events of the year. We're always part of it. We're sponsor again this year. And then also, if you're multi-location, you want to be multi-location, or you're curious about what's going on in the multi-location world, we're putting the band back together with some of our key 2 to 10 members. We're going to have a special session in conjunction with 2 to 10. I'm sorry, in conjunction with Serious Business. January 19th, 10:30 a.m. to 12. It's going to be highly interactive. We're going to follow the same format we used on November 11th, where we put people into private breakout rooms and you're actually talking to each other. So it's not all coming from us. It's interactive. It's peer sharing. So certainly mark your calendar on that. I'm going to invite several of you to be conversation starters. Also, we now have a group coaching option, which has just become hugely possible popular. Thank you for the word correction here. And I've got a group starting February 8th. We can also start a group earlier than that if you're interested in becoming part of a group coaching model. The nice thing about group coaching versus one-on-one is the affordability. And then the other thing is you're part of like a mastermind group. You're part of a community of other people that are there to help you become accountable. All of our coaches, including Carrie, Heath, and Jody, are well seasoned at this. They're outstanding facilitators. They're there to help you. So, all right. So closing thoughts. Let me stop the share here. And let me first of all see what type of closing thoughts you have here. All right. I see some great messages from some of my favorite people on there. Let's see if you guys have any questions or comments. And Michelle, we are on again next week, I believe. And I'm not sure who our guest is next week. We have someone in mind. We just need a confirmation. We're going to keep it short this week. Happy New Year to you guys. Let's make this an amazing year, okay? So many silver linings to 2020. Crazy, weird, quirky year. But in many cases, it's going to set the foundation for a new and better future for you and your teams and your family. We're so pleased you joined us today, and we're going to wrap this up right at the 45 today. So thanks for joining us, and we'll see you next week. Bye now.